very good morning. You're watching News 9 Live. I'm Karthik Malhotra. Thank you so much for joining us on this Friday morning as we bring you a roundup of all the news that's coming from the world of business, economy and the stock markets. You're watching Morning Brief at 9 and joining me on the show today will be Amrish Baliga and Brajesh Aisle. So don't go anywhere. We'll see you in just a bit. This is Morning Brief at 9 on News 9 Live. A quick look at all the headlines in news today. The GST Council weighs proposal to bring aviation turbine fuel or ATF under the unified tax framework. And your snack packs are getting smaller. Prices are going higher. Shrinkflation strikes again. Narrowing yield spread between US 10-year treasuries and Indian government bonds raise concerns over FPI outflows and the impact on the Indian markets. We'll discuss what this means for you. Better news coming from India's tech startup ecosystem. It has secured an $11.3 billion of funding in 2024, ranking third globally, just behind US and the UK. But investor wealth has eroded by close to 10 trillion or 10 lakh crore rupees, 9.65 trillion rupees as Sensex tanks almost 3,000 points in 4 days of market decline. The Indian government has proposed banning of unregulated lending activities to classify unregulated lending as cognizable offence with 10-year jail. The government releases over 47,000 crore rupees smart cities mission, 91% of projects completed, extension till March 2025 announced. Ola Electric meanwhile has announced ambitious plans to open 4,000 stores nationwide by December 2024, aiming to lead India's EV market. And major airlines request phased rollout of revised flight duty norms, cite crew challenges and fatigue management needs. Our top story this morning, the GST Council, which is currently deliberating on a major move bringing aviation turbine fuel or ATF under the goods and services tax framework, according to media reports. Currently, ATF is subjected to an 11% central excise duty with a reduced rate of 2% available under the Regional Connectivity Scheme. On top of this, value-added tax or VAT is still levied at varying rates depending on the state, creating complex and inconsistent tax structure. Now remember, the GST Council meet is scheduled for tomorrow, Saturday, but bringing ATF under GST, what would this mean for you, the consumer, who also happens to be a high flyer? Joining me to discuss this and more this morning is Mr. Amrish Baliga. Amrish, good morning. Thank you for being here on News 9. A lot of speculation about what Finance Minister and the group of ministers, the GST Council, will come out with in that meeting tomorrow. But ATF under GST, what does this mean? How does this augur for prices of airline tickets?
Good morning, Karthik. As far as ATF is concerned, and if it's brought under the GST ambit, I think it would be good for the aviation sector as such, because they'll be able to take that set off, which was not available earlier. As far as the customers are concerned, I don't think it'll be, too much of a difference as far as they are concerned. But it's very much possible that in case, this happens, airlines will be able to, have their fares slightly lower than what it is right now, because they'll have that much of cushion. So that's the only benefit which I think the customers will get. Otherwise, I don't think there'll be too much of a difference as far as the customer is concerned.
No, not much difference for the customers. That's not good news coming in this Friday morning with the speculation around AFT being under GST. But talk to us in general. What are the markets factoring in, or what are the markets expecting from this 55th GST Council meet scheduled tomorrow? There are talks about perhaps the health insurance also seeing a revised lower GST. What are the markets expecting, and what have they already priced in?
See, I think there are two major things which the markets are factoring in or trying to gauge. I think the first one is the new slab which people are talking of 35%, which again will have a number of sin goods or the luxury goods getting into that. And one of the goods which are commonly used is textiles, apparel. Priced more than I think 1,500 rupees, which they're expecting it to go to the higher slab. I think that would be negative for that space, especially the textiles and apparel space.
Okay.
The other one is about the life insurance, which would get into this ambit at possibly a lower GST. I think that would be quite positive. For the customers as well as the life insurance companies, because clearly you'll get a much better sort of a cover at the same price, which is good for the consumer. And because of this, possibly, the demand also can move up, because people would possibly look at higher covers going ahead.
Okay. There were also talks last time around, Amrish, if I remember correctly, about introducing a 15% slab, so possibly moving up certain 12% basket of goods and services into 15% and parallelly reducing some 18% slab items to 15%. Do you think there is merit in the government trying to do that?
Yeah, it's very much possible that the government could in fact introduce that slab, but it's very difficult to give, comment on that right now without knowing as to which are those goods or services which can move from 12 to 15 and the ones which can come down from 18 to 15.
Okay, difficult to comment at the moment. Well, of course, we will know this only tomorrow and we will bring that up. But Amrish, stay with us, staying with taxes and staying with the cost of items that you buy. Well, imagine picking up your favorite snack pack only to find that it feels and in fact is much lighter. Well, it won't really be an illusion because shrinkflation is back at work. Companies are battling rising costs of wheat, cocoa and edible oils by shrinking pack sizes or subtly raising prices. Well, big players like Britannia, Parle, ITC and Godrej are tweaking their strategies to cope. So expect prices of biscuits, cakes and packet staples to climb up as much as 7% in coming months. Well, in fact, Britannia CEO Ranjit Singh Kohli confirmed a 3 to 5% price hike ahead, along with reduced pack sizes, an effort to balance rising costs without overwhelming consumers. With edible oil prices up 40% year on year and a new 20% import duty adding pressure, the industry faces tough choices. So your shopping basket might soon feel a little lighter on quantity but a little heavier on the wallet. So shrinkflation, Amrish Baliga, it's here, it's back again. What does this really do for the consumer and what does this do for the margins of the FMCG companies?
See, despite the shrinkflation, I think the margins would be under pressure because you can't shrink beyond a certain level. I mean,
right.
if you're giving, say, 20 grams of wafers, you can make it 15, you can't really make it 10. Otherwise, you need to raise prices, and if you're raising prices from the minimum slab, like most of these snacks, the smallest packets have been available at 5 rupees. Now, 5 you don't make it 6, you need to make it 10. So that is also not possible at this point of time. So overall, I think it will result in a slightly lower sort of demand because of the inflation overall, because that's the first thing people cut when there's inflation.
Right.
And at the same time, like I said, the margins would be under pressure because they will not be able to reduce the grammage to a very large extent.
Well, Amrish, just to point a little case study we were discussing just before this show in the newsroom, a young boy in the team happened to tell me that ever since he was born, the Parle-G packet has been 5 rupees and it hasn't really changed while the quantity has come down. So that's in line with what with with what you're stating, but so is the case in fact across pretty much all FMCG products. You don't really see the prices go up and you see quantity reduce. So I mean, is it okay to continue with this shrinkflation, and how does it work globally? Is it time to now actually address inflation as inflation and raise prices?
I think so. I think somewhere the companies need to bite the bullet and say that the costs have gone up, so we are increasing prices for the same grammage. Like I said, I mean, beyond a certain level, you cannot reduce I mean the size, because, for example, you're talking about the Parle biscuits.
Yeah.
And Parle biscuits, as of now, if I'm not wrong, you get 6 biscuits in that ₹5 packet. You can't bring it from 6 to 2 biscuits. It's just not possible.
Right. So I also want to understand the implication of this 20% import duty on edible oil, and edible oil prices have risen 40% year on year. Now that is obviously something which is really huge for the consumer who actually depends on edible oil for the basic needs of cooking. What can the government do, or what can companies do to actually curtail this? I mean, can we increase production domestically, reduce dependence on import oil, or are we going to be in this sort of import era from countries like Malaysia, etc., for much longer?
See, the major import of edible oil is palm oil. And as of now, the Indian production is not enough to meet the demand. And as long as the prices go up, clearly the input costs for the Indian companies will surely go up, and they'll have to increase prices for the retail. And whatever we're talking about, I mean, that 5.5%, 5.75% inflation, I mean, that's only a number. I mean, you ask a person on the street as to how much his monthly bills have gone up by, I mean, the figures would come nothing less than 15-20%. So the actual inflation, I mean, at the ground level is much higher than what is being stated. And this is what is putting pressure on the overall demand, especially the urban demand, which we see is coming down, is basically because of this.
So is there something that the government can do? Because we've seen that whatever the Reserve Bank has tried to do, Amrish, hasn't really cut it beyond a point, because headline inflation is what the Reserve Bank looks at, and supply side issues are something which is difficult for a central bank to control. So is there something that the central government can do to tame inflation, or we just take inflation as fait accompli and move on with higher bills month on month?
See, the biggest inflation issue is with the food items. And the government has been talking of managing the supply chain, ensuring that the supply chain is smooth in the last 10 years. But nothing much seems to have been done about that, because if you're talking of the cold storages, you hardly see fresh new capacity coming up in that space. And that is what is creating the issue as far as the food inflation is concerned. I mean, you require storages, whether it's whether it is cold storage or the regular storage, and you need to also smoothen the supply chain, which is where I think we are taking a hit. I think the government still needs to do a lot more as far as that is concerned, to ensure that the price fluctuation as well as the inflation is kept under control.
All right, so supply chain is the name of the game. Amrish, I want to move from shrinkflation to shrinking bond yields. The yield gap between US 10-year treasury bonds and Indian 10-year government securities has shrunk to its lowest level in nearly 2 decades, a development that could majorly impact foreign portfolio investor inflows or outflows into Indian debt, government debt. According to market experts, this narrowing spread might even trigger outflows. The shift comes as US 10-year yields surge, driven by the Fed Reserve's hawkish stance. Foreign investor Amrish Baliga, this narrowing gap between what the US 10-year treasury offers and the Indian government bonds, how does the life of an investor invested in debt products really change?
No, see, first of all, I mean, why do these FPIs or FIIs invest in the Indian bonds? Because the gap is decently large, and that takes care of the difference in the risk profile of both these countries. But then when you see the yield narrowing, it doesn't make sense for them to remain invested. So it's quite natural that they would prefer to go to the geography where their risk is lower than an emerging country like India. So naturally, when they exit, clearly the bond prices will fall, and the yields will increase, and that is the time possibly they could again look back. But as of now, I clearly see FIs possibly exiting and getting into the US bonds.
Right, well, that is the FII, FPI game playing out. Let's move on to something else. We've seen the fact this has been a week of some stellar startup IPOs that we have seen. MobiKwik being the outshiner among all the IPOs that we saw this week. Now, there is also another story of this winter funding which is beginning to thaw. And overall, according to Traction India Tech Annual Report 2024, India has emerged as the third largest startup tech ecosystem globally, raising about $11.3 billion in funding. And India happens to have surpassed China and Germany and falling behind just US and the UK. Now, there has been a 6% increase from 10.7 billion in 2023, but a sharp 56% drop compared to the year before, which is 2022. So, Amrish Balika, at this point, is it fair to assume with inflation in the US coming closer to the 2% range, we saw a higher 2.7% later, in the month of November. But overall, is it fair to assume that this funding winter that startups were faced with across the world is now beginning to thaw, or do you feel this is just a minor 6% increase and we can't really establish a trend line from here?
No, I think it should continue to thaw because, clearly, like the amount of money which is actually made in the startup system is much, much larger than the amount of money which you make investing in secondary markets. Especially globally. I'm not talking of India because India clearly has given extremely good returns in the last 3 to 4 years. So, clearly I see again money moving back into the startup system. So we should see, I think, better sort of numbers going ahead.
What does this mean for startups that were looking to first shift domicile back into India from countries like the US or Singapore and other countries, hoping that this funding winter that they were faced with could partly be offset by listing in the Indian markets and coming out with IPOs? So going forward, do you think that trend of startups listing on Indian bourses is likely to slightly slide away if the funding season from private capital improves?
No, going ahead, the startups looking at India for the IPOs, yes, I think even that we should see, the trend changing. Because if you see 2024, the amount of funds which have been raised in the IPO, I think it's a record. If you're looking at the last few years, it's clearly a new record which you have created this year. And especially if you're looking at the SME, I think it's the mind-boggling numbers which have come out there. When you talk of startups, when they are ready for an IPO, I think the Indian markets would clearly provide them the right amount of funding.
Okay. Well, let's stay with the stock markets. And in fact, what a week this has been, Amrish Balika. In fact, starting from the massive swing last Friday, and now we are sitting on another Friday and the last 5 trading sessions. And let's see how today shapes up. But investors have witnessed a massive erosion of wealth, with the Indian equity market shedding almost 10 trillion, exactly 9,65,000 crore rupees in just 4 days of sharp declines. The BSE benchmark Sensex plunged by almost 3,000 points, marking a 3.5% drop over the period. In fact, yesterday the Sensex fell for the 4th consecutive day, losing 1.2% at its lowest point during the session. The index has dropped 1.44%. So overall, how do you view the market mood from here, Amrish Balika? We've seen massive erosion of wealth, but there were factors which weren't really in our control, and not least the Fed commentary coming in. But going forward, 2025 around the corner, just a week or so to go. So how do you see the mood of the markets from now, from today's trading session until perhaps Donald Trump assuming office, or let's say budget presentation by the Finance Minister of India?
See, I think in fact I've been cautious for a while, looking at the sort of valuations, the steep valuations which we are quoting at. And recently we have seen that the macro numbers also have been concerning. Q1 earnings had started showing a downtick, but people thought, that's just a blip. Q2 was mostly disappointing, and that's when we start seeing the markets correcting. And now, when the Q3 comes, starting January, about 8th or 10th of January, we'll start seeing the Q3 earnings coming in. I really don't see that Q3 earnings could be any way better than Q2, could be worse in specific sectors. So I think that is what is bothering the markets. And we saw that fall starting from 26,000 plus on the Nifty. And we had a good correction of about 3,500 points. And after that, we have seen 1,000 points of a bounce. So this was only a bounce. And now, again, we have started the downward journey. And I'll not be surprised if we see levels closer to about 22,000 over the next month or so. Because in addition to the Q3 earnings, which could be disappointing, like I said, the additional volatility will be added from January 20th when you have the Trump's inauguration day. And from then on, I think on a daily basis, you'll have extended sort of volatility based on the sort of statements which come. Because one thing we are clearly bothered about is how the tariffs could play out.
Right. So tariffs, of course, is top of mind for everybody. And like you mentioned, a muted Q3 or a subdued Q3 could also spell trouble. And I think the headline you're giving us, Amrish, is that your expectation is that the market would see 22,000 levels. Well, I'm not sure investors are going to be very happy this Friday morning listening to you. But it's a pleasure for us at News9 to have you with us, Amrish Paliga. Thank you so much for taking time out and being with us here today. Well, moving on, the Indian government, in collaboration with states, has proposed a new bill aimed at tackling unregulated lending, classifying it as a cognizable and non-bailable offence under the proposed BULA, or Banning of Unregulated Lending Activities Bill. Penalties could include imprisonment for up to 10 years. The Finance Ministry has sought feedback from stakeholders by February 13th, seeking input on this draft legislation, which targets both traditional and digital lending practices. The bill defines unregulated lending as activities carried out by individuals or entities not authorized by the Reserve Bank of India or other regulated bodies. It prohibits public lending by any such unregistered individuals or organizations, marking a major move to curb informal lending operations. Well, with that, it's time for a very short break right here on News9 Live. But on the other side, all the stocks that should be on your radar this Friday morning, with Brijesh Ale joining us in just a bit. See you after the break.
You remember when someone had hit our car? I had got him to pay up for all the damage.
Yeah, so?
If something goes wrong in this guaranteed returns share, I will complain to the exchange and get full compensation. See, there's an agreement.
Dad, you know what? Nobody can promise guaranteed high returns in the share market. Such illegal schemes are sheer fraud. The exchange will not give any compensation for these. That agreement is also useless.
सोचकर, समझकर, इन्वेस्ट कर।
Bonjour, madam.
आज बड़े फ्रेंच बन रहे हो? हाँ?
याद है 10 साल पहले मैंने कहा था I will take you to Paris.
पेरिस नहीं, पेरी। तुम्हारा प्रोनाउंसिएशन भी ना तुम्हारे इरादे की तक।
मैडम इरादे कभी ऑफ नहीं होते, टेक ऑफ करते हैं।
SBI लाइफ स्मार्ट प्लैटिना सुप्रीम के गारंटीड रिटर्न से करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ, अपने लिए, अपनों के लिए।
Unlimited love. B6 Mahindra Electric Origin SUVs.
Welcome back. This is Morning Brief at 9. I'm Karthik Malhotra, and in this segment, Brijesh Ayal would be joining us to help us make sense of the market mood today and stocks that are in news and could perhaps be on your trading radar. But first up, let's just take a look at the mood of the markets as they opened just a few minutes ago. Well, not a good start for the Indian markets again. Nifty 50 holding strongly below that 24,000 threshold and Sensex well below the 80,000 levels. In fact, both the indices have opened about 0.2% in the red this morning. Better action coming in the mid cap and small cap space. But India Wix, the volatility index, is up about 2.5% this morning. Let's look at the heat map of the Nifty 50 stocks and see how these stocks are faring today. Well, the IT sector seems to be a mixed bag with Tech Mahindra, HCL Tech not opening strong this morning, but TCS, Infosys and Wipro a slightly stronger opening. In fact, TCS up more than 1% in morning trade. We've got the banking stocks a bit in the red this morning. Axis Bank down about 1.4% or so. Joining us to make sense of the market mood and what are the triggers that are driving the sentiment in the market today is Brijesh Ayal. Brijesh, good morning. Thank you so much for being here on News 9. Take us through your interpretation of why the markets happen to be in the weak territory again today, this Friday morning.
Yeah, hi, morning. So I believe that there is a selling in the market, and then the way we saw the selling on the last 3-4 days, and yesterday after the Fed thing, there was a gap down opening. So I believe this 23,800 is likely to be the immediate base. So directionally the trend would be negative, but then sooner or later we should see some bounce. So we are looking at 23,800 on a closing basis. By any chance today being a weekly close, if we see a close below 23,800, then there can be a further damage in the index. And previously when the Nifty took support, it was somewhere at 23,200. So things may go wrong if 23,800 is not respected today on the closing basis. But then eventually, if you look at the data on the PCR front, Nifty is taking support, and even though when there is a pressure, I think Nifty might hold this 23,800. It's too early to comment, but then this is what I believe. And if there is some bounce and 24,000 is taken out, then we can talk of some 200 points odd bounce in the Nifty. But having said this, on the other side, the Bank Nifty is having a good amount of pressure. So Bank Nifty, I think, will see some further corrections. There is a sell-off is there. As you said, Axis is one which is not supporting the Bank Nifty. 51,000 is what I'm looking for the Bank Nifty as of now. If it closes below 51,000, then there can be weekly setup can go wrong.
All right. And you said that there could be a breakout at 24,000 levels. Are there any specific triggers which could result in a bit of a bounce for the broad markets today?
Yeah, it would not be a specifically breakout. It would be like a pullback trade. So I believe the IT and realty are the two space which are showing strength. So because of the IT, there would be some support would be there in the market. So more or less it would be do with the IT and then the realty space.
Okay, well, IT and realty space should be on the lookout today. Let's move on to aviation airline stocks, Brijesh. But before that, news coming in, of course, one by way of the GST Council meet scheduled tomorrow, perhaps slated to bring ATF or aviation turbine fuel under GST. Well, that would be a big trigger, perhaps a positive trigger for airlines. But India's major airlines, including Indigo, Air India, SpiceJet and Air India Express, have all requested more time for the phased implementation of the revised flight duty norms. The airlines have raised concerns about the increased crew requirements and highlighted the need for a fatigue risk management system. Now, according to media reports, the airlines have informed DGCA that they could begin implementing the new norms in a phased manner by June 2025 at the earliest. So how are you looking at aviation stocks? If I can start with Interglobe Aviation, the parent company of Indigo, is there a trade set up today?
Yeah, definitely. I think the Indigo, the way yesterday there was a good amount of buying was there and it has taken as support. So some bounce can be expected. 4,800 would be the directional view for the Indigo. And on an immediate basis, previously the support was seen at 4,200 marks. So I think there is some amount of buying can be seen. So this pullback can be there. So somebody who are already having a position should ride this towards 4,800 mark. That would be the resistance zone. So if it sustains, then we need to review it. But then as of now, at this level, we can talk of 4,800 levels.
All right, 4,800 levels is the view on Indigo. Let's shift focus to SpiceJet. And of course, SpiceJet has also been inundated with news. In fact, a 3,000 crore rupee fundraise is what SpiceJet was talking about. And I mean, it's a stock and it's an airline which has been in a bit of a trouble, though on a year-to-date basis, it is pretty much a flat stock, down just about 0.2% or so. Is there a trade for SpiceJet set up today?
It will be more of a range one. It is taking support at this 50-55 marks. So there is a demand for the SpiceJet. But then having said this, that momentum is missing. So I believe it maximum 65 would be the level where it will again face some resistance. So not too much of upside, but it's a range bound kind of a session move for the SpiceJet specifically.
All right, a range-bound session expected for SpiceJet. Let's shift focus now to IT stocks, Brijesh. IT stocks are in focus today. Well, also with a news item coming in that US-based IT and consulting giant Accenture has reported strong numbers for Q1 of FY25, surpassing street estimates. In fact, the US-listed shares of Infosys Limited and Wipro also ended with gains of up to 4%. So let's start with the IT pack, TCS to begin with. How do you see the trade setup for TCS?
I think TCS, we have seen some slight profit booking from the level of 4,500 mark. But then directionally, I believe the TCS is looking good. So sooner or later, the TCS from the monthly time frame, I think 4,800 can be seen. This is a directional view. On the way down, 4,200 would be the maximum correction as of now. Okay. So this correction may go towards those points, but then directionally we are positive, and then 4,800 is what we should be looking for the TCS.
4,800 levels for TCS. Let's shift focus now to Infosys. Again, a similar macroeconomic environment, a similar environment, not just in India, but even in the US. How do you see Infy stocks placed for trade today, Brijesh?
Infy today specific slight profit booking, maybe some sell-off is there, but then again we are watching from the weekly time frame. From the technical perspective, there is a bullish flag kind of a moment, and which talks of another 400 points rally on the Infosys. So we are quite optimistic, and then I believe that this rally should be there. As a sector, we believe this IT should do good, so we are positive.
Okay, so would the same sentiment hold true even for Wipro? Are we talking about, again, it is the same environment, but in terms of Wipro's client base versus TCS and Infosys's, how do you see Wipro placed for trade?
See, Wipro has been a laggard. So Wipro, maybe with the overall IT, it may move, but then on its own, I don't believe Wipro has this trend. 320 is the mark where again the call writers are active from the derivatives point of view. So it would be a slow mover. So on its own, there is no strength in the Wipro. Only because the sector is moving, there can be some momentum. But if I need to take a call on the Wipro, I would avoid.
All right, avoid Wipro is the view coming in from Rajesh L this morning. Rajesh, if we can now move to FMCG stocks, and in fact earlier on the show we were discussing this shrinkflation coming to strike back. Packet sizes shrinking, prices increasing, and something that shrinkflation may augur well for the margins of FMCG companies. But then beyond just shrinking pack sizes, not increasing prices is something that could add pressure on their business as well. So in the context of inflation, shrinkflation, edible oil up 40% year on year, a 20% import duty on palm oil imports, what do you make of FMCG stocks today, if we can begin, let's say, with Britannia?
So FMCG directionally as an index, I don't think there is a strength, because this has been one of the underperformer, and then recently there was ITC, some news was the demerger, and there's one of the reason why the ITC saw some bounce. And now if you specifically talk of the Britannia is seeing a corrections, and the value of 200-day moving average is somewhere close to 4,400 level. So directionally there is no strength. I would not take any fresh buy setup in this trade. So if there is some bounce, if somebody wants to take this bounce as an exit opportunity and play for some decline, that can be one of the trading bets, but not from the positional point of view, I would avoid.
Okay, avoid Britannia is the word coming in. You were talking about ITC, and ITC happens to be in the news not just because of inflation and inflation of food prices, which is a worry, but also the talks of the possible demerger of ITC in the month of Jan. So keeping those news triggers in mind, is there a trade setup for ITC this morning?
ITC, we are keeping a watch on 460 and 480 are the two levels where there is a range kind of a activity which is going on. So ITC being one of the high beta stock from the FMCG space. 480 is the level where it's a multiple resistance are there, and even the core writers are extremely active. So by any chance, if ITC trades above 480, then we can talk about another 20 points kind of a move. That would be the maximum move which I can talk of. But right now we need a confirmation, and that confirmation will follow above 480 marks. Okay, and if that confirmation comes in, any chance of ITC breaching its 27th September yearly high of about 522, or do you think those days for ITC are over for the foreseeable future? It would be a very risky call. I think maximum bounce I will be talking about another 20 points move from 480. So maybe if data change and if there is extreme buying, then I might change my view. But right now at this point, I would bet for only 500 if 480 is taken out. All right, a bet on 500 if it breaches the 480 mark. I want to shift focus now to Nestle, Brijesh. And Nestle, of course, not just the news triggers that we've spoken about. There has been this most favored nation debate with Switzerland. And while some experts believe that the removal of MFN status is not really going to have an impact on the trade between India and Switzerland, but the Nestle India parent being a Swiss company, could there be some trigger which may not augur too well for the stock going forward? We have seen that the stock has been in the red, down almost 20% year-on-year basis, year-to-date basis. So Nestle on the weekly chart, it is negative, and there is continuous distribution is what I can see in Nestle, and I think this negative bias can stay long till 2100 marks. So I would wait for that levels to be tested, or maybe that levels to be breached. So once it breaks 2100, and then if there is any bottom formation or maybe some volumes getting in the counter, then we might review it. But definitely from this point of view, we'll be talking of 2100. We'll wait for that opportunity to be seen. So as long as we don't see 2100, there can be always a pullback, but then positional buy should be avoided as of now. All right, a positional call should be avoided on Nestle. Let's talk about one more FMCG stock this morning, and this is Marico. Marico India has done a fairly decent year. In fact, a sharp contrast to Nestle. The stock on a year-to-date basis is up about 19% as we speak right now. So a 100 rupee upside on the year on Marico. Where do you see the stock from here? Yeah, so this can be one of the stock which is outperforming the index, and the structure is positive. So it has taken a quite good amount of support at 600 level, and right now it's 646. So this momentum can stay long, and then we can talk of 700 on the higher side. That could be the immediate resistance zone. So bias is positive. So somebody wants to take a position or maybe having a position should stay long towards 700 levels. All right, 700 levels on Marico is what Brijesh is talking about. Well, Brijesh, thank you so much for being here with us on Newsline Live this morning. We will have you back in coming days as well to gauge the mood of the market and advise our viewers on what stocks they should buy on. Before we head into a break, let's just quickly look at how markets are faring this morning in India. Remember, we had
open Nifty and Sensex. They were both down about 0.2%. If we can bring up the market data right now as we speak, well, a slightly more decline for Sensex. Sensex is now down close to 0.3%, while Nifty is holding in the 0.2% range. Volatility has slightly come down at about 1.96, but overall the mood on the markets does not look too good today. We are looking at 23,900 levels on the Nifty 50 and about 79,000 mark on the Sensex. Well, we will head into a short break in just a bit, but before that, a look at the global headlines making news today. The US GDP growth has surpassed expectations at 3.1%, indicating strong economic performance amid uncertainties. US stocks close mostly flat after early rebound fades. Markets await inflation data for next year. And US weekly jobless claims fall more than expected, indicates slowdown in labor market. Bank of England holds interest rate at 4.75%. Divisions over rate cuts amid inflation concerns. And Foxconn is reportedly in talks to buy stake in Nissan from Renault amid expansion into the EV sector. Apple negotiations with Tencent and ByteDance to integrate AI systems into products bypass OpenAI. US Supreme Court to hear TikTok's appeal to block potential January ban over national concerns. Airbus tests new wildfire fighting kit for A400M troop aircraft. Targets growing wildfire threats. Amazon workers strike at 7 US facilities, push for contract talks during holiday season.
XEV9e Mahindra Electric Origin SUVs.
Bonjour, madam.
आज बड़े फ्रेंड्स बन रहे हो? हाँ?
याद है 10 साल पहले मैंने कहा था I will take you to Paris.
पेरिस नहीं, पैरी। तुम्हारा प्रोनाउंसिएशन भी ना तुम्हारे इरादे की तक।
मैडम, इरादे कभी ऑफ नहीं होते, टेक ऑफ करते हैं।
SBI लाइफ स्मार्ट प्लैटिना सुप्रीम के गारंटीड रिटर्न से करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ, अपने लिए, अपनों के लिए।
Challenge is part of business.
Success to me means achieving a lot with limited resources.
It is the idea of bringing the best of East and West together.
Welcome back. You're watching Morning Brief at 9. Let's move on to all the international stories that you should look out for. The United States GDP has outperformed expectations, showing a growth rate of 3.1%, surpassing the 2.8% estimate according to the latest report from the US Commerce Department. The revised growth was driven by upward revisions in exports and consumer spending, although a downward revision in private inventory investment partially offset the increase. This growth follows a 3% expansion in the second quarter. Despite challenges such as consumer drawing down savings from the COVID-19 pandemic and facing higher interest rates amid the Federal Reserve's efforts to control inflation, the US economy has demonstrated remarkable resilience. And shifting focus to the Wall Street, well, US stocks ended mostly flat after an early rebound faltered following a steep sell-off the previous day. The Dow edged up, ending a 10-day losing streak, while the S&P 500 and Nasdaq slipped slightly. Take a look.
U.S. stocks ended little changed on Thursday, giving up an initial rebound following a sharp sell-off the day before. The Dow ticked up marginally, barely snapping a 10-session losing skid, its longest since 1974. The S&P 500 and Nasdaq each ticked down about 0.1%. The prior session saw all three indexes suffer their biggest one-day percentage declines since mid-summer. Wednesday's sell-off came after the Fed said it may cut rates just twice in 2025. George Cipollone is portfolio manager at Penn Mutual Asset Management.
Yesterday was a historic Fed day. Treasury moved up about 10 basis points, Treasury yields on the 10-year, and that was the most since 2013. Beyond that, we saw the VIX go up 74%, which was its second largest spike ever. And then so we saw across the board stocks react to that. Going into January is going to be very, very much dependent upon interest rates and then expectations for inflation. So every reading will be important from here.
Speaking of important readings, the Personal Consumption Expenditures Price Index, the Fed's preferred inflation gauge, is due on Friday. Fed officials expect core PCE, which excludes volatile food and energy prices, to be stuck at 2.5% through 2025, better than this year's figure but significantly higher than the Fed's 2% target. Stocks on the move Thursday included Micron Technology, which slumped more than 16% following its forecast of quarterly revenue and profit below estimates. Shares of homebuilder Lennar lost more than 5% after reporting fourth quarter results that came in below estimates. And shares of FedEx, up 1% at the close, gained more than 8% in extended trading after the delivery service announced the much-anticipated spin-off of its freight trucking business.
All right, staying with US weekly jobless claims have fallen more than expected. According to the Labor Department, initial claims for unemployment benefits dropped by 22,000 to 220,000 for the week ending December 14th. Well, below the economist's forecast of about 230,000 or so. This marks a period of volatility in claims, complicating efforts to assess the overall labor market. While conditions are loosening compared to pre-pandemic levels, the slowdown appears orderly. Despite concerns over inflation, the Fed Reserve recently reduced interest rates by 0.25 percentage point, projecting fewer rate cuts next year. Additional labor market data next week will offer further insight into December's employment picture. Foxconn is reportedly in talks to purchase a stake in Nissan from Renault. Jun Seki, a former Nissan executive now with Foxconn, is in France negotiating with Renault officials. This move comes amid Nissan's ongoing discussions with Honda to deepen their cooperation.
Reports of talks between Nissan and Honda to form an alliance took another turn Thursday. Taiwan's central news agency reported Foxconn has shown interest in a potential stake purchase in Nissan from Renault. They said Jun Seki, an executive from the contract manufacturer, is in France for talks with Renault officials. Seki is a former Nissan high-up who now leads Foxconn's electric vehicle business, while Renault is Nissan's biggest shareholder. A source told Reuters Foxconn is in talks with Renault to buy at least some of the French firm's holding in Nissan. They further said Seki is in France for these talks. Foxconn had no immediate comment on the report. Renault could not be immediately reached for comment, while Nissan declined to speak on the matter. The move by Foxconn comes as Nissan is holding talks with its longtime Japanese rival Honda. It aims to deepen cooperation, including a potential merger, and comes amid deepening financial and strategic trouble for Nissan.
iPhone maker Apple is in talks with Chinese tech giants Tencent and ByteDance to integrate their AI systems into its own products, according to media reports. This comes as Apple seeks alternatives to OpenAI's ChatGPT, which is not authorized in China. Take a look.
Apple is talking to Tencent and TikTok owner ByteDance about using their AI systems in China. That's according to Reuters sources. The tech giant has started to roll out iPhones equipped with OpenAI's ChatGPT, but the US bot isn't authorized for use in China, forcing Apple to find an alternative. The sources say discussions with Tencent and ByteDance are at an early stage, and there was no comment from any of the companies involved. Winning the Apple deal could be big for any Chinese firm, with the country's market for AI systems crowded with different players. Dozens of models have been launched there by both big firms and startups. Besides Tencent and ByteDance, that includes the Ernie chatbot from search engine giant Baidu. Apple has reportedly also been talking to Baidu over its systems. But media reports this month suggest they have faced setbacks over technical issues and disputes over access to iPhone user data. The absence of AI capabilities on Apple's products is being seen as a big negative in China, where the company faces declining market share. It has faced a battle to stay in the top 5 smartphone sellers there amid mounting competition from local rivals. Chinese giant Huawei already has a handset on the market with built-in AI powered by its own proprietary model.
From Apple to Amazon. Amazon workers at 7 US facilities went on strike, pressurizing the company into contract talks. While Amazon insists operations won't be disrupted, the strike could still create challenges as the company deals with its busiest period of the year. Take a look.
In a move timed to put maximum pressure on the world's largest retailer, Amazon workers at 7 U.S. sites went on strike early on Thursday in the midst of the Christmas season holiday crush. The action is aimed at pressuring Amazon into contract talks with their union. The International Brotherhood of Teamsters, which represents about 10,000 workers at 10 of the firm's facilities, said warehouse staff in cities including New York, Atlanta, and San Francisco are taking part in the, quote, largest strike against Amazon. Now the strike threatens to disrupt operations at the busiest time of year for retailers. However, the e-commerce giant has multiple warehouses and smaller delivery depots that may allow it to get around the stoppage. The company said it does not expect any effects on its operations during one of the busiest times of the year. The union had given it a deadline of Sunday to begin negotiations, and workers had already voted to authorize a walkout. Teamsters officials said they would also be putting up picket lines at hundreds of Amazon sites nationwide.
And finally, Airbus has tested a new firefighting kit that can convert its A400M troop transport aircraft into a wildfire fighting plane. The kit, which includes a large tank and discharge pipes, allows the aircraft to drop 20 tons of water. Take a look.
European aerospace group Airbus has a plan to help fight the increasing number of fires due to climate change. It's tested a removable kit which can transform an A400M troop aircraft into a plane to fight wildfires in Spain. Airbus said the tests took place around 43 miles from Madrid and aimed to confirm the efficiency of the kit for attacking wildfires indirectly. The planes can drop 20 tons of water or retardant into a fire. Sarah Vargas is the project manager of the A400M firefighter.
Dropping these 20 tons, you get long lines of retardant, and in those kind of fires that are so big, you cannot attack them only try to extinguishing. You need also to cut them.
The kit consists of a tank and 2 discharge pipes that are installed in the cargo and in the ramp. It can be added in any of the over 100 A400M transport aircraft already flying to help complement fire brigades. Airbus is tapping its clients to see if they would like to buy the kit and hopes to see it in use in firefighting in a couple of years. Scientists say that while most fires are set by humans, hot and dry conditions being driven by climate change are helping the fires spread more quickly, burn longer and rage more intensely.
Well, that's all we have time for on this edition of Morning Brief at 9. Thank you very much for watching. Stay tuned to News 9 Live as Yash Goyal brings you all the news updates at 10 a.m.
If it's a cancer, then what?
It's very distressing.
Anyone can have cancer.
Mentality है कि ये बीमारी मुझे नहीं हो सकती.
There's a thing called cancer is right inside me.
सबसे पहले जो होता है ना, डर जो होता है कि now at the end of the world.
My life went upside down.